Are you interested in becoming a real estate investor? Did you know that you can do it with little to no money down? Yeah, you can. Today, I'm going to share with you 6 ways to buy an investment property with no money down, and I'm going to get into those details right now. Hey everybody, hope you're having a great day. My name is Ben with Barredo Real Estate at Keller Williams Realty, and I help people just like you buy, sell, and invest in real estate while using social media to educate and entertain on topics like home ownership, pet ownership, and real estate, and of course, all things Knoxville. If you enjoy content like this, then please give this video a thumbs up and then hit the subscribe button. Then share this video with somebody that may find value in it. Your support would mean the world to me. So what does it mean to buy real estate with no money down? Traditional lenders like a bank or a credit union require a down payment when you buy any kind of property, when you're using a loan, which typically in a traditional conventional loan is 20% or more of the purchase price. That can equate to tens of thousands of dollars just to get your foot in the door of owning your first rental property. When someone says they are buying real estate with no money down, what they're really referring to is putting none or very little of their own money into the investment up front. Some real estate investors use other people's money for a down payment. Some use a creative financing option. We're going to get into some of those in this video. Look, the less money that you have invested in a property, the higher the likelihood of an increased return on your investment. That's why savvy real estate investors use a number of the following methods to reduce how much money they have to bring to the transaction. So here are those methods right now. Number one is using your primary residence as a rental. Who says that you have to buy a single family house as your first home? It's called house hacking, which is the process of buying a multi-unit home or property, usually 5 units or less, because that's still considered residential, and you can use conventional loans for that. And then you can live in one unit and rent the other units out to cover your mortgage. A lot of young real estate investors are using this strategy to get their first investment property with little to no money down. If you're using a down payment assistance program or a low down payment loan like an FHA, you still have to come up with some money. But if you're using like a VA loan, which allows you to get into a property with no money, then you can literally get into the property with just maybe $1,000 out of pocket. And that's a truly no money down way of getting into a rental property. Number 2 is leveraging another property. If you already own a property and you've owned it for a long time and you have equity in it, then you could more than likely leverage the property's equity to get into your first home. It's called a home equity line of credit, or a HELOC. And basically what you'll do is refinance your home at 75 or 80% of your property's value, and then taking what's left over and using that as a down payment. You just want to make sure that if you do that, that the rent that you pull is enough to cover the cost of repaying the loan back, as well as the expenses with the rental property. Number 3 is use seller financing. Seller financing, also called owner financing, is a non-traditional form of financing, and basically in which the seller of the property or the owner of the property holds the financing for you, the buyer. The seller or the owner, basically they act as the lender for the buyer. Instead of you having to go to a bank to get a traditional loan, the buyer repays the loan over time according to the repayment terms outlined in the agreement that you both come up with. They basically hold the note or the mortgage while you're paying them for the property, but you're using it. Number 4 is assuming the seller's mortgage. Another option for buying an investment property using little to no money down is assuming the seller's current mortgage. And this is also, you've probably heard, it's called subject to. In a subject to deal, you buy a rental property subject to the terms of the owner's current mortgage. This option generally requires a smaller down payment, but depending on the seller's needs and motivation, it may be possible to assume a loan for no money down. I've heard of people doing it for $10. For example, if the property is worth $100,000 and the current mortgage balance is $80,000 with 12 years remaining, then you would pay the seller $20,000 to stay in the property and then take over the $80,000 mortgage, paying the monthly principal and interest moving forward on that home. And you'd be paying it directly to the bank. By doing this, the investor can avoid having to get a loan and all that stuff. But you are subject to the loan's regular schedule amortization. The next and the fifth is what's called hard money lending. You can get a hard money loan, and this is usually other investors that have tons of success and they want to loan their money out because they're tired of buying property. So you can go to them and get a loan to buy your first investment property. The beauty of this is that these people understand what a good investment property is. So if you can bring them a deal that makes sense, you have a better likelihood of getting the loan because that's what they're looking at, the deal. They're not looking as much at your credit history. But the problem with these kind of deals is, or these kind of loans, is they usually have their a short-term balloon schedule as well as higher interest rates. You can usually find hard money lenders by searching hard money lenders in Google, or you can go to a great website called Bigger Pockets, which is all about investing, and they have a link to hard money lenders in your area. Number 6 is a joint venture on an investment. Basically, one of the most common methods of investing in real estate with no money down is to buy an investment property using other people's money.
Saying it. Oh, it's for other P, it's for people scratch a temple. Get out with LPP, yeah, you know me. Get out with LPP, yeah, you know me. Get out with LPP, yeah, you know me. Who's down with LPP? Every last.
You can find a private lender or funding partner willing to partner on the investment, giving you the funds needed to purchase the property. This could be coming up with a down payment or the entire purchase, depending on the deal, in exchange for a return on the investment. Partners could be your family members, they could be friends, they could be colleagues, they could be people you network with. There are a variety of ways to structure a deal so they get a great return on their investment. Here's a bonus tip, number 7. You can use a combination of all the above. Most successful real estate investors will use a variety of the methods above to structure an offer to a prospective seller. It's likely that you'll have to use a variety of them in order to get to the closing table. Well, that's it for this video today. I hope you guys enjoyed it. I hope you get something out of it, and I'll have more investment tips to come. Remember, hit the subscribe button and then click on the bell so you don't miss out on any more content like this, and then give this video a thumbs up. And remember, if you're in the Knoxville area, you're thinking of buying an investment property, I'd be happy to work with you. I'd be happy to help you find that. If you're thinking of buying and selling, hit me at the phone number and the email in the description. Even if you're not in the Knoxville area, give me a call. I'd love to answer your questions. Then I can hook you up with a great agent in your area to provide an excellent service, and they can help you on your way to the American dream. If you're an agent interested in Keller Williams Realty, or you have a referral, you can send that to the email here, Barredo@kw.com. Thanks so much for watching this video, and remember, guys,